Okay, here we are on the last trading day of the month, and you got the third day in a row of all green on the screen. The market sitting near highs of the session with the Dow on track for its fifth consecutive monthly gain, but the S&P and NASDAQ are on track to end the month down. So as we head into this long holiday weekend, what can investors expect? We got Keith Bliss, Senior VP at Cattone & Company, joining us from the floor of the New York Stock Exchange. And, you know, Keith, there's a lot of worry out there. A lot. It looks like we're pretty much almost back to the place we were before the whole Brexit thing ever happened. Were these worries completely overblown in your view?
Well, certainly they were. You know, I wrote yesterday in a piece that I write occasionally for a publication that I do out in Chicago. I said if you had fallen asleep on Thursday and Rip Van Winkled all the way to Wednesday of this week and woke up and looked at the market, you would have never even known that Brexit happened. I mean, it's as if the vote never took place. And that is significant, Trish, when you think about how people get worried about these events. They listen to the hype, they listen to the bluster. And really, it's an important lesson that we got from this event. You really need to take a step back and find out exactly what's happening.
Wasn't it just the politicians, the elites, the celebrities out there saying, oh, my goodness, you know, even President Obama going over there and telling the Brits, you need to stay in the EU. There is so much vested interest, Keith, in keeping the EU together, and the UK was a big part of that. But it's as though everybody woke up and said, hey, you know what, this isn't the worst thing in the world, and you know what, maybe, just maybe, the UK is going to be better off. It's going to be more competitive because it's going to be able to govern itself.
Well, that's right. So they can take back their sovereignty from the plutocrats in Brussels, which is something, by the way, that a lot of people don't realize. This has been something that's been festering in the UK for years and years and years. And they've been a member of the EU for 59 years, ever since the end of the Second World War, and they've been unhappy with the way things have been running, particularly since the Maastricht Treaty came in 1992, which gave to the common currency, and they had that battle there where they weren't going to go with the euro. They were going to keep the pound sterling. So I think from the market's perspective, though, this is why you should really take a step back and not get wrapped up in the hype.
That said, can I just jump in for a minute? Because we're not looking so good ourselves. You know, we're barely growing. Wages have been lousy. You heard me talking about that earlier. You got a jobs report that was just miserable last month. So, you know, this might have been people's opportunity or excuse to take a little money off the table. Do we really think we can justify levels such as we're seeing right now based on our slow, anemic growth situation, Keith?
Well, I think what you have to do is look at the U.S. equity market relative to other risk markets, other asset markets around the globe. And as I've been telling everybody the last 2 weeks, the U.S. equity market is the best house in a bad neighborhood at this point in time. And that's where you're seeing the money come in. And then you take a look at other factors. Forget about the global story, but you take a look at other factors like the banks, all the U.S. banks passing the stress test and announcing very quickly massive buyback programs of their own stock. So we're still seeing a lot of that happen. Companies taking their additional cash and doing buyback programs. That will have an inflating nature to the market. Okay,
let me ask you, when we talk about the inflating nature to the market, Janet Yellen, is she going to just stay pat for a while? No increase in interest rates in your view, given what we're seeing around the world?
Yeah, I don't think we actually see an interest rate increase until the middle of 2017. In fact, if you look at the Fed funds futures, most traders are betting that way now. And more importantly, there's actually some bets being put on the table for the meeting in December that she'll actually take it back down to 0.25%. So we're moving in the...
Yeah, that could happen.
Yeah, it actually could happen.
And the market likes all that. So hopefully good news ahead. Hopefully it's not going to be one of those rocky summers. Keith, good to see you.
Same here, Trish. Thank you.
You bet. All right,